Welcome back friends to the class number 74. Many people have messaged me, sir, please make a separate dedicated video explaining quick 5 minutes on the differences between the cash credit and overdraft limit. So here is the video. So what is the difference between cash credit and overdraft limit? I will take just 5 minutes of yours to explain this. So first of all, the drawing power calculations. The drawing power calculations have been already explained in my previous videos in full depth and full details practically. So the drawing power calculations are done only in the case of cash credit limit primarily. If you are availing cash credit limit from bank A or bank B, whichever bank you are availing cash credit limit from, the drawing power calculations will be applicable. So OD limit can have the indirect impact, but it doesn't impact the drawing power primarily. So I will give you an example. So suppose you are having limits from bank A, you are having only overdraft facility from it. So the bank A will not be having any drawing power calculations for your business. But suppose you are availing the limits under multiple banking arrangements. So suppose you are having limits from bank B as well. Bank A and bank B both. Bank B has given you CC limit, right? So when bank B, so since bank B has given CC limit, it will do drawing power calculations. It will do drawing power calculations. Bank A will not do any drawing power calculations, but when bank B will do any drawing power calculations, it will deduct the utilization of overdraft limit while arriving at the DP. So overdraft limit will impact the drawing power indirectly here, right? So if you are availing only standalone overdraft limit, then the drawing power calculations will not be applicable on your business. So it doesn't happen generally in banking that bank A will allow that bank A will allow both OD and CC limits to you. Normally, one single bank doesn't do both of these two limits simultaneously because there is no such separate purpose that this serves to the client, right? So they give either OD or either CC. So usually both of these limits are not allowed simultaneously. Similarly, stock statement submission. In cash credit limit, stock statement submission is mandatory. Sometimes people message me that I have limit of only rupees 5 lakh, CC limit of only rupees 5 lakh, of only rupees 1 lakh, or only rupees 10 lakh. Does the stock statement requirement applies to me or not? So friends, whatever amount of limit you avail, if you are availing cash credit facility, stock statement shall be applicable on you. Yes, for smaller limits, banks can give you some extra benefit, like they can take quarterly stock statement from you instead of monthly. So this much benefit can be given by the banks, but they cannot waive off the requirement of submission of stock statement, right? So although some banks in OD cases also, I have seen practically in OD cases also, some banks demand stock statement submission, but it is very, very rare. Even if they demand stock statement, it is just for their monitoring purpose only. They don't do any drawing power calculations basis that stock statement, right? So they will not calculate any drawing power by itself. Next is the stock audit requirements. So in cash credit limit, the stock audit requirement will be there, and depending upon the loan size, if you have a smaller loan size up to 10, 20 crores, 30, 40 crores, or depending upon the bank policy also, they can conduct a yearly stock audit in your business. For higher limits or riskier client, and or as per the bank policy, they can have half yearly stock audits as well. They can have quarterly stock audits as well. So it all depends upon the risk, loan size, bank's policy. Generally, annual stock audit is applicable. That means once a year. So stock audit requirement is there mandatorily in cash credit limit, but like stock statement, it is not as mandatory in overdraft limit. Most of the banks don't get the stock audit done in overdraft limit cases, but one or two banks that I know personally have their internal policy that if the loan exposure exceeds a certain amount, say 5 crore, 10 crore, then whatever the type of limit client is availing, the stock audit will be applicable. But that stock audit doesn't have any implication if the client is having OD limit, because even if the drawing power is not meeting as per the stock statement, still the bank can't deny you availment of OD limit. That stock audit is practically only to capture any unusual activity, any fraudulent activity in your business. Charge over current assets. In cash credit limit, banks will always take the charge over your current assets. They will not waive it. But in overdraft cases, they can waive the charge over the current assets. Loan to value ratio or the collateral cover. In cash credit limit, since the banks are calculating drawing power, they are taking charge over the current assets, they are taking stock statements, they are getting the stock audits done. So they are regularly monitoring your account. So they are very much confident and comfortable on how you behave in future and how to control you in future if you misbehave, right? So since they have some kind of control in it, so they are happier to lend you more cash credit limit against the lower property margin also. So if you are submitting, suppose a property of rupees 70, they can allow you limit of rupees 80, 90, 100 depending upon the loan size and internal policies. While in overdraft cases, there is generally no charge on current assets, no stock statements, no drawing power calculations, no stock audit. So the limit utilization, how you use the limit, its monitoring is not in the control of the banks. So that is why in overdraft limit cases are considered riskier by the banks, and that is why they demand higher collateral margin, good quality collateral in overdraft cases. They may allow you overdraft limit 100% of the property value, or they may also say that you need to submit property of rupees 100 and we will give you limit of rupees 80 against it, right? But this also depends upon the bank to bank internal policies as well. Some bigger banks with deep pockets, with the higher risk appetite, can allow you higher overdraft limit on lower property margin also. But generally, if we compare with the cash credit limit always gets better benefit in terms of collateral cover. Overall comfort level of the banks and entrepreneurs. So entrepreneurs are more comfortable with OD limit because there is lower monitoring involved and you can use the funds without banks intervention as you want. In cash credit limit, entrepreneurs are not much happy because they have to complete certain type of formalities for the banks even after availment of the limit. While from the point of view of the bankers, they are very much happier with the cash credit limit for the obvious reasons, as you know, and they consider OD limit much riskier. Exposure limit. Next, the last point is the exposure limit. So as I have already told you, in OD limit, the risk, bank taking higher risk. There is no monitoring mechanism, and in cash credit limit, the risk is a bit less because there is comparatively higher monitoring mechanism involved. So generally, the banks restrict the maximum overdraft limit that they can lend to their borrower. Some banks has the policy that they will not lend overdraft limit beyond 5 crore rupees. Some banks 10 crore rupees, some banks 15 crore rupees. I haven't seen many banks or any bank doing more than 15 crore rupees of overdraft limit to any client. So generally it is most of the time restricted up to 15 crores. But if you want the higher exposure of 30 crores, 40 crores, 50 crores, then you have to go only with the cash credit facility. No bank will give you the overdraft facility for this, right? So these were the differences between the overdraft and cash credit facility. I have made this video on your specific demand only. Thank you very much.